was we talked a lot about these unrestricted net position, not restricted in capital assets or restricted, unrestricted. That's our rainy day fund. Capital asset condition, how does it look? Pension plan funding. Will we be able to pay our employees when they retire? Look at Detroit. Debt to assets. Who really owns the governmental entity? And quick ratio, which is our short-term cash position. And these are some more. We'll just go through a couple more. Changes in net position. Did it improve, decline, or remain steady? Now, what I want you to do is, I know we looked at these all at point in time, but think about doing this analysis over many years, over past 5, 6 years. You need to establish a trend. You need to know, is it isolated or is it a trend? If it's a trend, then you know there's something that's serious, that's worth looking at. Interperiod equity. Remember interperiod equity? Who paid for the cost of operating the city? Current, past, or future tax and ratepayers. And this is a thing I can spend hours on, this and what we have done. A total financial disaster at the federal level. Not just an ordinary disaster, an unbelievable disaster as far as interperiod equity goes. It's the guys who will come later, they'll take care of it. Because Congress cannot agree. And because of that, this whole issue of interperiod equity. Business type, I think this was one of the exercises. If it's business type, does it cover its expenses? Or do they get subsidy from elsewhere? Well, if it's business type, it should cover, unless it's a public transportation system, such as New Jersey Transit. Okay? Debt service coverage. Okay? Were our revenue bond invest with our ability to pay them on time? Obviously, they would be. These are financial capability ratios from financial performance ratios. Revenue dispersion. This is one-time revenue as opposed to what the other revenues are. I'll give you a quick example here. You're ready to go buy a house. And you look at two towns. One town has 90% of it is residential. The other town has 50% residential, 50% commercial. They're both the same every other way. Which one would you think of? Why did you say commercial, Robert? The question is this. So I have two towns, right? They're equal in every way, and you're ready to buy a house. So one town has 90% of the town is all residential. The other town has 50% commercial and 50% residential. Which one would you pick? And why? Yeah. Why do you say commercial? Because he said commercial. Okay. So because you feel that the commercial property, because commercial property owners don't send kids to schools, right? Right? Is that one of the things? Because unlike residential, commercial property owners don't have kids who are going to the school, right? So you save money that way. And you know what? Most people would answer it that way. But, you know, we don't have time, but it is a double-edged sword, and someday I'll tell you about that. But most people would do what you just said, is that, and that's why towns go crazy trying to attract commercial development, because they don't have to be, you know, people work from 5 days a week and they're gone. Services, not like residential. Schools, nothing like it. And yet they pay what? Exactly the same tax. So that's one of the reasons. Debt service load, okay, what part of our budget goes to paying off long-term debt? That's obvious. What is our long-term general obligation debt burden on our taxpayers? And will we be able to issue more long-term general long, which is the legal debt limit? And even here, it's amazing what people do. I'll give you an example. A town reaches its debt limit, can't issue anything more. You got to do something. Example, right from New Jersey. I won't name the town. Hire a very clever accountant, CPA, and a very clever lawyer. And they say, you know what we're going to do? See this water department we have? You do all your... We're going to spin it off as a utility. It will become what? A business type activity. And because it's a business type activity, it's a separate entity, legal entity, they'll go out and borrow money. Happens all the time. And or better still, a case where let's sell our waterworks to a private utility, to a for-profit entity, and use that money to lower our debt. Well, you know that the rate that's going to be charged by the for-profit entity is not going to be lower than the rate that you're currently being charged. But these are the creative things that happen. People think of all these things and how, all to address these questions. Property taxes per capita, what is our property